Can state housing policy stop predatory lending practices? Have you ever wondered if state housing policy can really put an end to predatory lending practices? This is a pressing issue that affects many borrowers across the country. Predatory lending refers to unfair and deceptive loan terms that can trap people in high-cost debt, often leading to foreclosure. State governments have a significant role in regulating mortgage lending, especially when it comes to non-bank lenders and subprime loans, which are often sources of these predatory loans. One way states can help is by imposing limits on loan terms and costs. For instance, many states have set caps on interest rates and fees to prevent excessively high costs that are typical of predatory loans. Some states even prohibit abusive terms like prepayment penalties, which can trap borrowers into unfavorable situations. Another important measure is requiring lenders to verify a borrower's ability to repay a loan before approval. This means that lenders must assess whether borrowers can afford the loan, which can reduce the number of loans that borrowers cannot manage. This step is crucial in lowering the risks of default and foreclosure. States can also regulate non-depository lenders, which are often the source of predatory loans. By using licensing and oversight, states can restrict high-risk lending practices from these entities. This regulatory authority is vital in ensuring that borrowers are protected from unfair lending practices. Moreover, some states have stronger anti-predatory lending laws than what federal legislation offers. This means that borrowers in those states have better protection and access to responsible credit options without abusive terms. Education is another key aspect of state housing policy. States can promote borrower education programs that inform consumers about the risks of predatory lending and how to avoid them. By supporting community programs and certifying mortgage brokers, states can help consumers make informed decisions. Additionally, state policies can work in coordination with federal and local laws to fill gaps and address specific market conditions. This collaboration can enhance the overall effectiveness of anti-predatory lending measures. While state housing policy can significantly reduce the prevalence of predatory lending, challenges still exist. Predatory lenders may try to evade state laws by exploiting loopholes or weaker regulations in other states. Therefore, robust enforcement mechanisms and cooperation with federal authorities are essential for effective state policies. In practical terms, states that have enacted strong anti-predatory lending laws often see borrowers gaining access to more sustainable mortgage products. This helps stabilize homeownership and reduce foreclosure rates by limiting abusive lending practices. State housing policies are powerful tools that can help curb predatory lending practices. By regulating loan terms, enforcing borrower protections, overseeing lenders, and promoting responsible lending, states can make a real difference. However, stopping predatory lending entirely requires ongoing enforcement, federal cooperation, and market vigilance.